David Aach, Blue Sage, thank you for being here today. Really appreciate it. For our listeners, if you don't mind, before we get into who you work for and the product that you represent and how that product might help our users, our lenders, our clients think about how improving what they do, I'd like to start with just a little bit about you and your background, how you got to be in this particular role, how long you've been in the industry, why you've stayed in the industry as long as you have. I think it's always interesting to see how smart people and people who've achieved a lot got to where they are in life. So with that, can you tell us a little bit about your background?
Sure. So I've been in the industry, believe it or not, since the mid 80s. So I obviously started as a toddler, and I started out at City Mortgage. I worked as a chief of staff to the head of fulfillment operations there during a time when interest rates actually dropped from 18% to 8% precipitously in a very short period of time. And our fulfillment operations went up 300% in volume, and, kind of not all that, different in terms of what we just went through this year, right? In terms of the volumes that we've seen this year, which are unprecedented. And I was a techie when I first joined Citibank and moved from the institutional bank into the consumer bank to kind of be part of running a business, which is every techie's dream, is to be part of running a business as opposed to just, dealing with data centers and programmers and, as we say, getting the mushroom treatment, which we won't explain what that is, but I'm sure Henry knows. And then there was a consultant working for us at the time who's wrote all the software we were using in the fulfillment operations. And coincidentally, his name was Carmine, that was when I first met, Carmen, who is actually the founder of Blue Sage and was also the founder of Palisades. So I've worked in the technology space around mortgage origination pretty much consistently throughout that time. I was part of the Palisades company that we sold to IBM in 2006 and was at IBM for 10 years as part of IBM's mortgage practice, trying to, both do fulfillment operations, fulfillment software, as well as the servicing business that they had as well. And then I joined Docutech in 2016, spent almost 4 years at Docutech, the premier compliance documentation provider in the industry, and then joined Blue Sage earlier this year. And so, I always like to say I'm a recovering techie. I wrote code at one point in my life, had a couple of computer science degrees, and I'm a recovering banker, having worked for City Mortgage for a while. So I have all kinds of fun things to overcome.
You have a technical background. You've coded before. You've obviously been deep into business operations. I think some of the positions you described you had at IBM and at Docutech probably brought you into about every lending shop in the country, I would imagine.
Quite a few.
Yeah, it's a fair statement. So I guess where I would start is, how much has changed in your mind since your City days? How much have the challenges specifically changed, or are we still chasing the same demons in this industry, in your opinion?
It hasn't changed as much as you would have hoped. The mortgage operations, as you and I both know, still is somewhat of an assembly line kind of a process, where applications come in the door and they move from processing to underwriting to closing, right? So it is, kind of a serial process. There's not as much parallelism in it as you would hope. The cost to originate a loan is higher today than it's ever been. MBA estimates it, at $9,000 a loan, right?
So let me ask you your your expert point on that, because everybody we're talking to is talking about the challenges with cost, and everyone's saying how much more expensive than it used to be. Don't you find that a little bit strange that in theory technology has evolved? Maybe thought leadership has evolved, you would hope, but costs keep going up. What do you attribute that to?
I think the mortgage industry, first of all, has gone through an unprecedented period of increased regulation. Right, between 2015 when TRID came in, and then TRID 2, what we're going through right now with the IRLA. Right. So, the answer is I think compliance is a part of that problem. I think that there still is a tremendous amount of manual processes around document processing. There still is not a great way for borrowers to electronically transact in a straight-through processing manner. I can go with any one of the online brokers and buy hundreds of thousands of dollars worth of marketable securities at the click of a button. But I can't refinance $100,000 mortgage on my own home that I live in full time in less than 30 days.
As you think about the roles you've had it in different places, is there one thing you can put your finger on that has been the slowest to change? And is there one thing that you would say, hey, I actually have some hope here. There's hope on the horizon from a technology perspective?
We've seen some pretty cool technology recently around automatic document recognition and automatic data extraction around documents. So we're right now piloting some really cool technology around that, right? Where theoretically a borrower could submit a W-2 or a pay stub or a tax return, and we could immediately say to the borrower, "Oh, first of all, we think that was the local Chinese menu, not the document you thought it was." Or we can say, "We actually asked you for your 2019 W-2, and it looks like you sent us the 2018 one." Or even that, we asked you to, give us proof of income of X amount, and you gave us something different. And so in a real-time basis, be able to go verify documents and scrape data off and interact with the borrower. So I think that's pretty encouraging.
Okay.
On the flip side, we have today, and we've had for a long time, the technology, and I think this exists in the industry, to basically allow a borrower to apply online and price the loan, including all the loan level adjustments, calculate all the fees, and allow the borrower to basically auto disclose to themselves. That technology exists. It's probably existed for some time, but it certainly exists today. What's interesting is how few lenders actually offer that capability on their externally facing websites. Most of them are either concerned about it from a compliance perspective, because I don't think they can calculate all the fees or all the pricing correctly, or the loan officers want to be involved and want to kind of make sure that they built a relationship with that individual, and that they kind of make sure it's more than just somebody kicking the tires and price shopping, and that has been much slower to be adopted than I would have ever imagined.
One quick question on this notion of, hey, technology's been there for a while, but people are slow to adapt it because they're fearful of X, Y, Z. I hear the word fear a lot with lenders relative to risk, compliance. What are they fearful of in your mind? What has changed in the last decade that lenders seem to be more reticent to be caught making a mistake than maybe they were 10 or 15 years ago? Or perhaps it hasn't changed, but I do hear the word fear a lot. What are they afraid of?
I think it's fear of reputational impact associated with, being sued by the CFPB, having large tolerance cures that they have to pay to regulatory agencies, potentially very expensive buybacks of loans that are out of compliance. So I think it's a risky business, and there are inherent financial risks associated with compliance-related errors.
And based on what happened during the 208 to 212, did the penalties that were actually incurred, does it warrant that level of skepticism about trying technology in your mind, or do you think it's just a hangover effect from what happened a decade ago?
Well, I think there's some political aspects about who got punished and by how much back in 2008.
Mhm.
I probably prefer not to get into, but I do think that technology has certainly created solutions that have not been adopted at the level that one would have expected. I think the industry is by nature, risk averse, and compliance people, are on the hook for some pretty big things. And not to mention all the security related challenges you have associated with data privacy and, people's personal information somehow getting released. So there's a lot of challenges, but I think I think it may be changing. And, we certainly see with the way people are adopting some of our technology, some encouraging signs.
So your technology, when the announcement came out in the rags that David Aach was leaving DocuTech and joining Blue Sage, my phone rang a bunch. So if you don't mind sharing with us, tell us about Blue Sage, tell us why you made the jump, and then tell us why you're so excited about the product, obviously.
Sure, thank you. Well, listen, I was very flattered, to have the opportunities that I've had over time, including, the opportunity at DocuTech. But Carmen has managed to put together a team that, basically many of the same people we had at Palisades, and in fact, even the company from prior to that. And so we have a team of people who have created, basically the only LOS on the marketplace that I'm aware of that, has been built in the last 5 years, right? And it's built, works in the Amazon cloud. It's, so it's new. And, listen, as you know, Henry, if you get to, rebuild an application from scratch over again that you've previously implemented, you do all the things you wish you had done the last time over again better.
Yeah, sure,
right?
Sure.
And so, where Blue Sage was at, the beginning of this year is we had a top 25 correspondent lender in production. We had a top 25 retail lender in production, and we had a top 25 wholesale lender in production, right? Which is a pretty, impressive way. And so the company was really poised to kind of take off. And what we, needed was to figure out a way to scale the enterprise to basically meet the opportunity in the industry. And so, that's kind of what I've done. That's kind of similar to what I did at DocuTech. It's similar to what I did at Palisades. And so it's with people I know and have worked with before, and, we finish each other's sentences. And so it's really a very comfortable work environment. Didn't really realize I'd be working from home for the bulk of the year, but, we've had a very exciting year. We literally tripled the size of our customer base. And, we're going to end the year, doing, 4 times the monthly closed loan volumes that we did at the beginning of the year. And we have a number of clients in the implementation phase, and we're very excited about the opportunity in front of us.
Every time I talk to any customers about their LOS or the prospect of addressing the LOS, it's like talking about, that crazy uncle you don't want to come to dinner. Oh my gosh, they don't want to have a conversation. They want to avoid it. It's nothing but headaches. So I think LOSs have had bad reputation for a while, yet you've joined a new one. So why Blue Sage? What's the fresh thinking, the fresh ideas? What makes Blue Sage a positive sort of idea on the marketplace versus everybody else saying they hate their LOS?
Well, you're absolutely right. I mean, when I talk to people and they say, how do you find new customers? I said, most of the time they come to find us. Right. We have people hitting our website, knocking on our door. We've generated a bit of a buzz in the industry. We have our own, borrower facing portal, so borrowers can apply online. We have a portal for the loan officers. So we have a POS capability. We have the full loan origination capability. We have now a document management capability with the ADR, OCR capabilities to do, income analysis and those kind of things. And so we kind of have a one-stop shopping approach to, mortgage technology for a lender that obviously runs in wholesale, retail, and correspondent. That's a unique offering in the marketplace that generates a lot of excitement. It's really super fast. We tell people, you get 1 to 2 second response time, and they look at us and think we're just bragging, but that's really, what the Amazon Web Services backend provides. And so, I remember my days at IBM when we were trying to sell our capabilities, and the question is, how do you build an ROI for a client to get them to change from what they have? 95% of the time when we talk to people, they've already decided they hate what they have. It's just a question of whose technology are they going to take to replace what they have, right? And so, that's a nice place to be from a software vendor. And listen, we all know that there are no. I say if replacing an LOS is like heart transplant surgery, there are no elective procedures in the heart transplant or the LOS replacement business. People only do this because they have to.
Just for our listeners, David referred to Palisades previously in IBM. So can you tell us a little bit about what Palisades was or is and how IBM got involved, just so they have a reference point?
Sure. So I joined Palisades in 2003, which was a really long time ago, but we had 5 of the top 10 lenders in the industry on our platform. And we were a LOS software provider. And that was, obviously before any of the blends or the Roostifys or any of those kinds of technologies were even available. It was a time when there were a number of players in the industry who were doing business process outsourcing for the loan fulfillment business. And IBM had a big services, outsourcing services business and really wanted to be in the mortgage fulfillment business process outsourcing business. And they built a facility in Charlotte, North Carolina to host that business. And they wanted to have their own platform. They want to control their destiny from a platform perspective, and they acquired the Palisades platform so that they could use that to deliver those BPO services. And they obviously inherited a software business for the LOS, which was what Palisades was doing. IBM, over the course of 10 years, between that and the Ceteris business, did over $1.5 billion of revenues, and basically made a lot of money.
In terms of the LOS being married to an operational solution for lenders, do you see, in your experience, are lenders becoming more open to this idea of renting or leasing or licensing the technology and the operations as a bundle, or do you still see lenders mostly separating those two ideas?
I think to a great extent, lenders like to control their destiny. And so I think it's always been challenging for companies in the fulfillment outsourcing business to capture anything other than overflow business, which is really hard business to make money at.
Right.
I think there's a couple of examples where it's been successful, but I think there's been more challenges than successes in that space. But I think lenders basically think that they they can do it better. I think that even with technology, you see many of the top lenders who have built their own technology. And, we always like to ask, do you want to be in the lending business or the lending technology business? I think, and you asked something about, the kind of segmentation in the marketplace. So, clearly small and medium-sized lenders don't have any choice. They can't be in the technology business because they can't afford it. It's a very expensive business to be in. The very largest lenders can. And if you look at, some of the the top 5 lenders in this industry all have their own proprietary technology.
Yep.
And I don't see that changing anytime soon.
So you see the larger entities wanting to be in the technology business, control their own destiny, be a builder of technology. Smaller than mid-sized guys really looking for a solution that they can rent. Yeah.
Right. But, listen, our target market is, the top 300 lenders in the U.S., people who do, 400 to 500 loans a month or more, right? That's a lot of people, right? So if the top 5 are going to build their own stuff, okay, so be it. That leaves 295.
So there's plenty of business out there for you guys. And it is a fragmented market for our listeners to know. There's really no, as you look on the origination side of the business, unlike servicing where you've got a dominant player that owns most of the share in Black Knight. On the origination side, it's really carved up pretty thin. There's only one lender with double-digit market share. Everybody else is splitting up single-digit, if my data is correct. So it is a place for you guys potentially have a lot of runway. You're probably pretty excited about that.
We are very excited about it. I mean, what is it? There are 15 or 20 LOS providers who split up that top 300.
There's some thoughts in the marketplace around this notion that the loan origination system, the loan origination platform, needs to be complemented by, fit for purpose microservice use cases, and that an LOS can't survive on its own. It needs to be married to things like underwriting automation, doc AI, income calculation, AVM appraisal. So the notion of the LOS being home-based, but in a modern architecture, being able to give lenders the ability to bring on, sort of best-in-breed thin slice solutions. I don't know if you've run into that argument as you're selling your product in the market. Is that as big an idea as I think it is, or are people still, well, no, if my LOS can do everything, I'd really rather my LOS do everything?
No, I actually do think. I mean, we utilize a number of third-party technologies to, nobody can do it all, right? Now there are some competitors who try to buy all the pieces, and even if they don't build all the pieces, but we use Closing Corp as our fee engine. We use Docutech, as you mentioned, as our doc engine today. We use Compliances as our compliance solution. So we have we actually did a deal with a third party to do the actual OCR and ADR technology. So we didn't build that ourselves. We integrate with 30 different industry providers for everything from flood to title to appraisal to credit. I mean, that's just the nature of the ecosystem that we live in. And what you have to do, I think, to be successful is to have the LOS be the orchestration engine, right? And to basically allow it to use automated workflows and rules and event-based technology to basically say, under a certain set of circumstances, human beings don't have to do certain things. Let the human beings manage the exceptions, manage the really hard loans or the really hard parts of the process or when exceptions come up. But as much as possible, use orchestration technology to be able to basically streamline the process and make things more efficient.
Let's talk about your clients for just a little bit. So a lot of the folks that are going to be listening to this are likely to be considering making an LOS switch and going through the process of definition, design, plan, install. So David, in your mind, what are the keys to success when you're doing an LOS implementation? And on the flip side, What drives it into the gutter based on your experience?
What drives it in the gutter is trying to customize the solution and have basically, no controls on scope, lots of scope creep, poor change controls. And basically what ends up happening is you just never get into your production, right? So we have a very rigorous implementation methodology. The platform is to a great extent mostly configurable. We try and avoid customization as much as possible. You can't avoid custom integrations to in-house proprietary systems, but the key is everybody's pretty much offering the same products. There's the 90% of the loans in the marketplace are Fannie, Freddie, FHA, and VA, right? And so those don't change that much. You may have different pricing, you may have different fees, but that's all configurable. So, the key is having a very rigorous and focused implementation methodology, really strong controls around scope and change management, and have a vendor and who basically has done this before, and have a platform where you don't have to customize the system to be able to meet the needs of individual vendor and lender differences.
It's always interesting to me that different lenders feel like in order to install a new loan origination system, they need to go through this documentation exercise on their process, because their process is just so different from anybody else's, and it's their competitive advantage.
Their special sauce.
Yeah, I've never really bought into that philosophy, but for you guys as a firm, have you built in a base configuration that in your LOS that pretty much says, look, unless you have some real wild reasons or expectations, you can use this out of the box and close a loan. You don't need to go through that laborious process redesign exercise, or are you still seeing your clients wanting to take the time to hand you over, sort of a target operating model?
No. Everybody wants to, I love it when I talk to people and they say, can we, be up and running in production, 4 or 5 or 6 months after we sign the contract.
Mm-hmm.
And, my sense is, it's unlikely. I think, we try and be completely, under promise and over deliver. It takes, basically 6 to 8 months to get a system completely through the setup. Everybody has their own branch hierarchy. So you have to put the organizational structure in there. Everybody has their unique product and pricing rules, and that's where the special sauce really is. And so, and people do have certain varying degrees of how they want automation to work, and so you want to configure the appropriate level of automation, right? I love the question of, well, if we put twice as many people on it, can we do it in half the time? and the
for that, but it'd be inappropriate for me to use it on this.
Exactly, and so I'll also not repeat that analogy, but you and I both know what that means, and the answer is no, you really can't.
Right.
And so, but on the other hand, if you don't try and we as we go through the kind of the scoping process, we say, okay, let's talk about all the things that have to be there day one versus what things can be there day two. And there's a lot of really cool things you can do, right, in terms of automation, and but the question is how many of them have to be there day one. And so that's one of the key things that we do. But I do not see all that much in terms of complete process redesign going on. Again, what we're trying to do is we're trying to get the system in, and then iteratively over time help them streamline. But there's a lot of things that people do today that we say, hey, you're not going to have to do that anymore. You're not going to have to have a disclosure desk of people who go through and check all the loans that are about to lapse over the 72-hour disclosure requirement, because that's a system automated function. So there's a lot of things that people have in their processes that today we say will just hopefully go away.
How do you compare Blue Sage to Rocket Mortgage, if at all?
Well, we don't spend nearly as much money on advertising.
I don't think anybody. I don't even think the political campaigns are spending that.
Right. And I think it's a great concept.
Mm-hmm.
And but I truly believe that if you, and I've done this, I've gone on Quicken's website when I was looking to refinance my loan, and what happens is I don't get to price my loan. I don't get to calculate my fees. What I do is I put in my name, my information. I put a little bit of information, what I'm looking for, and then my phone rings and somebody calls me.
Yes.
Right. And so we think that's not the way it should work. We think I go online, I put in, where my property is going to be. I put in, whether I'm purchasing or refining, whether I want to fix or adjustable. Put a bunch of other information in. Is it going to be my primary residence? And the system comes back and can give me multiple scenarios and say, okay, here's the options available. And those are all live dealing rates. That's the real rates that the loan officer would get, that anybody in the shop would get if they put in the same parameters when they were inputting a loan. And so we think that's the difference.
So product pricing and fees is really a calling card for you guys in terms of your technology relative to a lot of the other legacy systems that are out there.
And speed, the ability to do it, if it takes to, and the ability to do it accurately. So if with 100% accuracy that what the borrower is seeing is something that's not going to get you in trouble, that's really important. And a human being has to look at it to make sure it's okay.
It's an absolute compliment to your firm, and it's amazing what a copycat league in some ways mortgages are, because maybe 4 years ago, you and your team, the team at Blue Sage, was really just sort of coming out with the product, right? You had been in incubator building it. Once word got out on the street, everybody talks about Blue Sage. It's consulting companies, system integration companies. I have product companies calling me all the time for any insights I have around Blue Sage. Why do you think a product like yours can go from, out of the butcher block and into the mainstream consciousness so fast? What's going on in the world that people are getting that excited that fast about an LOS?
One can say that the bar must have been pretty low. I mean, what is it in a blind man's world? The one-eyed man is king. So we are very lucky that we're new. We're the prettiest young girl to dance, if that's what you want to call it. But I think to a great extent, the market has been starved for innovative new technology, end-to-end, cross multi-channel, lightning fast, and highly compliant. So I think that unfortunately we're not going to sneak up on anybody anymore. We're kind of, the word is out about us, and we compete on every opportunity with the industry, most well-known, well-established competitors. And so, but as long as we continue to innovate and continue to deliver, I think that we will be successful.
Speaking of competitors, is there anything on the horizon that does kind of keep you up at night? Are there any new ideas, new concepts, new vendors, players that may be expanding from offering, a thinner product, maybe expanding further up the value chain? Do you see are you worried about any competition right now?
We aren't. What keeps us up at night is making sure that we take advantage of the opportunity that is in front of us and continuing to, delight our customers. I mean, that's what keeps us up at night. It's not just about the next customer. It's about making sure your existing customers, and, they're constantly asking us to provide new functionality, help them drive efficiency. Like you said, they're all trying to get their costs down, right, and streamline their operations. And so that's really where we're focused. We have some ideas about some new products that we're going to be bringing out over the next couple of years that we think will help us stay ahead of the pack.
You should be super impressed, and so should your firm. And we appreciate you coming and chatting with us, because obviously we like to be co-branded with thought leaders and people who are doing new and interesting things. And obviously,
well, Henry, doing some great stuff too. We worked together in the past, and we hope to kind of do some things together in the future. And you guys got a great reputation. And listen, lenders require a lot of help to implement an LOS. Very few lenders have the bandwidth. They're all, especially in this environment, with record volumes, everybody's too busy processing loans to be running an LOS implementation project, right? So having industry players who can, help a lender, with the resources they need and the expertise to successfully implement a system is great for the industry.
So I'm going to let you wrap this up with one last really tough question. Fair enough?
Okay.
And I'll buy you a cup of coffee when I see you to,
okay.
Cup of coffee when I see you. So you brought up $9,000 to close a loan. So if the average loan size is $200,000, we'll just make the math easy. It's 450 basis points, right? So 4.5% of the value of the home comes out as in the form of a tax in some ways to originate it, fulfill it, deliver it, sell it.
Okay.
We started a campaign here at Infosys called Lab 64, which the idea behind that was 64 basis points of cost. So that would take the price to $1,400 all in, as sort of a North Star goal. Could we ever get to $1,500? In your mind, $9,000 is high, right? You've been in the industry a long time. You've seen numbers that were lower than that. Where do you think we should be? Where can we get to? How low do you think realistically the cost can go?
We think you can cut it in half.
Okay.
Right. Let's remove from that, loan officer comp. We're just talking about the operational piece of it, right? Yeah. We think we can be cut in half. We think our system is twice as productive as what any of our prospects is using today. And that, that's a function of, you don't do something on this keyboard and then go get a cup of coffee and wait for the cursor to come back 3 or 5 minutes later. And it means that there's a whole bunch of things that are done manually today that just no one has to do in the future state. So I think that's a realistic goal, and where we're striving to help our clients achieve that.
Well, listen, David, I certainly appreciate the time today. You've been a great coffee cup host with me.
Okay. All we need is a fireplace and maybe a glass of wine or something, but whatever. Henry, it's great to talk to you. Thanks so much for the opportunity, and look forward to seeing you at some point when the storm clears.
Absolutely. Stay safe, my friend.
All right, you too. Take care.
Thanks, man.